Use on-chain data to understand Bitcoin. Welcome to Mr. Big. In previous videos, we went through the basic logic behind MVRV, SOPR, realized price, and holder cohorts. So today, I am not going to reteach every formula. Instead, we use those same indicators as a live market map. Bitcoin is around $63,000, and the question is simple. Is this just another dip, or is the market entering a real bottom zone stress test? Here is the direct read. The most dangerous part is not simply that Bitcoin has fallen. The dangerous part is using a bull market chase mindset inside a bear market bottom zone. Short-term holders are already underwater. Some are selling at a loss. Long-term holders are starting to feel pressure, but the deepest historical capitulation signal has not fully confirmed yet. That means the smarter framing is not all in, and not panic. It is planned, patient, staged exposure. First chart, short-term holder MVRV. This asks whether recent buyers are, on average, in profit or in loss. The latest snapshot has Bitcoin near $63K, while the short-term holder cost basis is around $75K. The short-term holder MVRV is about 0.84. In plain English, many recent buyers are clearly underwater. That is a bottom zone ingredient, because weak hands are already feeling real pressure. But this is still early capitulation, not maximum historical capitulation. In the deepest bear market flushes, this metric can fall much lower. So the signal says, bottom zone is opening, but do not treat one reading as final confirmation. Second chart, short-term holder SOPR. MVRV shows unrealized pressure. SOPR shows whether coins are actually moving at a profit or at a loss. The latest short-term holder, SOPR, is near 0.97, below 1. That means some recent buyers are no longer just sitting on paper losses. They are realizing losses. This matters because durable bottom zones are often built when impatient holders transfer coins to more patient holders. But again, the signal is not screaming full historical panic. It says short-term capitulation has started, and the market may need time to digest it. Third chart, long-term holders. Long-term holder MVRV is around 1.29, so the long-term cohort still has some profit cushion overall. But long-term holder SOPR is around 0.85, below 1. That means the older coins that are actually moving are moving with realized loss. This is a subtle but important signal. The whole long-term holder base has not collapsed, but some older coins are starting to hurt enough to move. That is why I call this a stress test phase, not a clean reversal. Fourth chart, MVRV Z-Score and realized price. The realized price is around $54K, while Bitcoin is still above it. So the whole market is not fully underwater, but the profit cushion has compressed sharply. The MVRV Z-Score is around -0.92, which is already near a low valuation zone. But in the most extreme historical bottoms, this signal went deeper. So, the message is balanced. Valuation is much better than at higher prices, but this is not the kind of reading that proves the exact low is already in. Put the four charts together. Short-term holder MVRV below 1 tells us recent buyers are underwater. Short-term holder SOPR below 1 tells us some of them are realizing losses. Long-term holder SOPR below 1 tells us part of the older coin base is also under pressure. And MVRV Z-Score near -1 tells us the entire market has moved close to a low valuation zone. My label for this phase is bear market bottom zone stress test. It is not a normal bull market dip, but it is also not a fully confirmed reversal. So how do you act smarter in this kind of environment? First, if you are a long-term Bitcoin investor, this is the kind of zone where a plan can start. Not a panic buy, not all in, but a plan. Second, keep dry powder. If short-term holder MVRV drops toward deeper stress levels, or MVRV Z-Score goes further into the low zone, that is when the second layer matters. Third, wait for repair before becoming aggressive. If short-term holder SOPR returns above 1, and short-term holder MVRV starts recovering toward 1, the structure is improving instead of merely falling. The final takeaway is simple. A bottom is usually not one perfect price. It is a zone that tests patience. Right now, the four on-chain charts say short-term capitulation has started, long-term holder pressure is visible, and valuation is close to a low zone. But the market has not fully confirmed the deepest capitulation, or the recovery. So the useful lesson is not to predict the exact low. The useful lesson is to recognize the zone, stay disciplined, and avoid emotional all-in decisions. This video is personal research based on public data only. It is not investment advice. Remember to like and subscribe. Thanks for watching, and I will see you next time.